add something. Okay, I think we are sorted. All right, guys, I trust you're well. If you have any questions as we go through today's update, just pop them in the question box and I will get to them before we close. All right, so I'm looking at 6 markets. These are the markets that I am trading throughout 2025. And the key thing is not necessarily just the markets themselves. These are the markets that you are trading as well. Absolutely fantastic. If you're not trading these markets, remember it's the price action patterns that we need to be able to recognize and be able to make use of in whatever strategy we are trading. I've removed the exponential moving averages from these charts. You can put whatever EMA you use, 10, 20, 50, 200. It doesn't matter. And then apply whatever information or, ways that you use it to the markets. So I'll just try to keep it as clean in terms of price action as possible. All right, so let's look at gold. Let's look at gold. What I have marked on this slide is key levels, key horizontal levels that I think if you trade in these markets, you need to be aware of. I'm using the daily charts here. So trading these markets on the daily, whatever your strategy is, you've got to be aware of these key levels. Now, always bear in mind that whatever time frame you trade off, the patterns are the same because markets are fractal. That interesting word, fractal. So whatever price patterns you see here, they will be repeated on the weekly, monthly, yearly. If we got the yearly charts, you find them on the 5-minute, 1-minute, 3-minute, 15 hourly, 4 hourly, whatever. So principles, the chart patterns are all the same. It's just how you look at them. So for gold, a key level to watch out for is this horizontal level here. In November and December, we had a double top created, and the December one was pretty interesting because from there, the bears sold off quite aggressively, but bears failed to take out the low of November. So though the bears were strong to create the double top, they failed, to get to a new low. That's all they had to do. I mean, that was a pretty beautiful candle, right? Had they given us just one more candle closing beneath here, we said, oh, fantastic, the market is now bearish. But it's not. We are in a trading range. We have a higher low. We have a double top. Now, easiest way to think about price patterns in front of you is to say, well, if I was one of these institutional traders, these big movers that cause markets to move, we love them because they move the markets, we follow, right? Follow in their wake. If I was one of them and I was going to move the markets, what would I be thinking? Well, I'll be thinking, well, if I'm a bull, a big bull, where are all the other big bulls? We've been putting money into the market, buying gold. Why did we fail, to crack above this level? Does that mean that the bigger players, other big players, the bears taking the other side are stronger? Because all the bulls needed to do, Thursday was to break out above here. They failed. Friday, inside candle. So market is still bullish, but at this level, the bears are probably saying, hang on a second. We failed to get to a new low here, but here we are at the double top. So, bears who have been waiting to sell at a better price, instead of selling here when we fail, these are the bears thinking, we can now start to sell here. It's a much better price than selling down here. So this level is absolutely key for this asset, for everyone. If the bears are strong, they need to follow through and give us bear candles. Then we can say, oh, we have a wedge top, 1, 2, 3. The bulls have tried 3 times to get to new high levels. They failed, so the market is going to accelerate down, drop the price of gold, get beneath these levels, and who knows, maybe we might go a little bit lower. But as for now, we are at a killer. It is a wedge top because of that inside candle. All we need to see from the bears is follow through. If you get a bear candle closing down here, clearing these lows, then, as a bear grab, we think, well, I think I can sell this, but I'm not going to put my stop here because this level can be tested again. So I need to put a wide stop. If you're going to sell, you need to put a wide stop. If you want to put a wide stop, wait for a little bit more information, right? Wait to see, probably a lower high, then you can put a tighter stop. But some bears may be selling to create the bear, sell off from the wedge top. Other bears will wait to see a bear trend candle. So if I was trading off the daily, I would wait to see a follow through trend candle. Then I got to decide, am I going to trade the breakout from the wedge top with a wide stop, or am I going to wait for a lower high? So that's a pretty key level. For the bulls, they failed to do it on Thursday. They failed to do it on Friday. Friday, they tested the level close beneath. On Thursday. Friday, inside candle. The bulls need to come back with a strong candle. What's a strong candle? They just need to close above that. That's all they need. It doesn't have to be up here. Close above that. Give us some follow through and say, okay, bulls are strong enough. Might get a pullback, but they want to take out that level. So what takes place in the next couple of days? Tomorrow is actually interesting. I know you're going to say, well, the US and the next president has been inaugurated, etc. The whole world knows that fact. So I don't think it's going to make much difference to the markets anymore. So just look at the price action and make your decision based on that. Okay, so that's my thoughts on gold. Key level, wait for information. Now look at this. Look at DAX 40 or DAX 30, depending on what your broker has got. What they did here, just closing above the high. That's what I was talking about. That's all the bulls need to do. Just close above that. Show us that you got strength and accelerate up. So here, bulls closed above the high of December. Pretty key level if you go to the left, significant level for the DAX. If they closed above that, then all they need to do was to follow through. That dodgy candle, bull candle, still a dodgy, didn't close back beneath. There was enough follow through for more bulls to come in and buy. So the market is decidedly bullish on DAX 40. Can you buy that? Of course you can, or you can buy anywhere. You can buy and sell anyway. Just decide where you put your stop. But if you want to think logically through price action, which I'm advocating all of us to do, if you want to buy above here, you don't put your stop here because that level can still be tested. At the very least, you want to put a tight stop, put your stop beneath here. If that's too far for you, then wait for confirmation, wait for follow through by the bulls, or wait for a pullback to put a tighter stop. If you're buying a breakout, you need to have, a stop that's beneath. That's the most reasonable, logical place. A stop beneath the breakout level. Put a tighter stop. If you are willing to get stopped out more often, if you can deal with all that, getting stopped out and taking more trades, fantastic. Why would you do that? Well, you do that because, if accelerates up, you make more profit than the guy who is put their stop here. So you got to decide what you want to do. But the market is bullish. That was a bit of a problem for the bulls, but a nice follow through. That level can still be tested to see really the commitment of the bulls. When you get to OZN, this is the one currency that I am trading just by choice. I'm preferring to trade any currency. It's up to you. We are in the middle of a trading range, so the bears can still test the low of November, or they can confirm it may have a strong breakout above this low of November, low of December, a very strong breakout above this previous low high, they break out previous low high. But we are in a trading range. So if you trade this on the daily, it's best to wait. Really, you got to wait to see how we're going to get a test of this and maybe a double bottom, get a nice, decent enough reversal candle, low test, and you can buy at the bottom of the trading range and wait to see what happens at the top of the trading range. Or wait until you get it to the trading range, see if there's a breakout, pull back and buy, or get a high test. In a trading range, you got to be buying low and wait to sell high. If you kind of have a middle, there's nothing to do. Leave it, find another market to trade. For me, if this was on 5 minute, I'll just be waiting to see what happens. Silver, key levels. I think the low, this double bottom that we had, which was the December low, and that low from January micro wedge top 1, 2, 3. But I think it's just the double bottom. Key level And then the key level is the high of November that we had here. We are in the middle of a trading range. Now, if you have the appetite to trade this with a wide stop, you can sell. If you want to sell, I'm going to sell this. I think my test on it. But your stop's going to be up. There's nowhere else to put a stop. Alternatively, just wait. Would you buy this? Well, I look for swing trades. That's probably why I kind of say wait until it sets up. I'm looking for swing trade. I'm not scalping. If you're a scalper, you can do many things. Just sell, get out, buy, get out. But that's not what I'm doing. If I'm looking to buy, I want to see if we get maybe a higher low double bottom here. Get some kind of bullish confirmation. So we are in the midst of the trading range on the daily silver. Best to wait for more information. If we get a bear candle coming down here Monday, am I going to sell? Well, it still comes to where do you put your stop? You can't put your all. I wouldn't put my stop here because market can still test that. Am I going to put a stop up here and just agonize or just wait for clarity? That's what I would do. Nasdaq, pretty interesting. I'm like DAX is smashing through to high levels. Nasdaq, good for the bulls, but are we buying? Are we selling? Americans got to make up their minds, right? Give us clarity so we can decide what to do. I would wait until we get to this level, see if we're going to test above that, or if we fail, just going to get a low high double top, which should be fantastic. And if you get a double top here, bears failed, and you get a high test or inside candle for the bears, good enough to sell, but you need to stop somewhere up here and see if we get down here. For the bulls, I would wait. Bull candle, bear candle, bull candle. Even if you put a stop up here, it's illogical. Best to wait on the daily to see what you get. Brent crude, we broke out above these highs here, and this got tested. Good for the bulls, absolutely good for the bulls. Gap up beginning of last week, and we thought the buyers of oil with the higher prices should just carry it on up. But they didn't, but with a breakout pullback, big outside candle, they failed to trigger that. And now we are in a trading range. So last week was just a beautiful trading range, but this breakout was beautiful. So for the bulls, if we come back and test this and get a low test candle, bull candle, tail on top, beautiful bull body. So worth to buy that. I'll put my stop down here and see if we can get above that. But it's good for the bulls, but this level can still get tested. They can still test that level. Would I sell? I would sell off a lower high double top anywhere here, which becomes a three pushes, 1, 2, 3. I would sell that, or the double top high, the high test, I would sell that. But we need a little bit more information. So these are key horizontal levels, but there's something else that the market is showing us that I think is important in these markets. There are some channels that we need to look at. So I'll just place some channels in. So they give us a little bit more information in terms of decision making. So bear in mind what I was talking about, key levels, horizontals. Now, they're interesting channels. We get back to gold. Since the beginning of the year, we've been in a tight bull channel. A tight bull channel is strong, same forces as a bull breakout. So the bulls, in this breakout here, successive bull candles, it's just as strong as this in a tight bull channel. So the market has been bullish since the beginning of the year in this tight bull channel, taking us to this test that I was talking about. So interesting things happen now when we kind of put things together. Because we're in a tight bull channel, we might just get maybe one more bear candle. Doesn't mean the market is bearish, because we're still within this tight bull channel. The bulls can then just accelerate up. Just want to make it sound like they can accelerate up off that, which means you can then buy, if you want to buy that, stop down here, cognizant of that. But you are saying, well, I've been in a tight bull channel. I'm going to put my stop down here. If we break out, I can trail my stop, because I think the bulls are going to be strong enough to break out through here, get to 3,000, whatever the price is for the bulls. This tight bull channel is absolutely important in terms of what's happening with gold. Bulls are stronger here than they were here. I mean, here we kind of went sideways, broke out above and fell. But here it's been a pretty strong channel. That is a very strong it's evidence of strong bulls. As long as they will stay within this channel, test this channel, give you a low test, an inside candle, take the trade and manage your stop and see what happens when you get up there. So overlay the two things, gives you more evidence to think bullish as far as that is concerned. Another market with a channel, silver. Now the silver channel is not as tight as the gold bull channel. Just look at it, I mean, just use your eyes. I remember way back, it's a long time back. Let's tell my age or Paul's age. He was in a coaching group coaching seminar I was part of, and there were guys with all of this clever stuff and that were on. One guy said, "Well, Paul, if I can't put on all of those indicators or understand them, what do I do?" And he just looked at the guy. It was a lady. I looked at the lady and said, "Just use your eyes." I was like, "Wow, that's pretty smart. I'm glad I didn't ask that question." So there's a tight bull channel. George, why do you say that channel is tighter than that channel? Well, just use your eyes. You can see this is a channel, but it's not as tight or as that. So the bulls creating this in the gold are not as urgent. They could be as strong, but they're not as urgent, as determined uh, as the bulls up there. So the silver bulls are not as eager as the gold bulls. For us to say, well, they're pretty strong, they just have to stay in this channel. It can be a broad channel, they just keep going up like that. Still fantastic. Pretty hard to trade, unless you've got to say, well, there's a low of the channel. I get a low test here. And I'm going to put my stop beneath the low of the channel, is beneath here, hoping to get up here. You can do that. If we break out above any channel, the first likely thing is to test that breakout. So the market might come back and test that. This one is even stronger for the bulls. If the bulls break out above it, they're breaking out above the channel, they're breaking out above the double top. Any test you got to buy if you don't buy the breakout. Here we're still in a large trading range, so a little better to wait a little bit. Another market with an interesting channel is Nasdaq. It's in a broad bear channel. Broad bear channels are much easier than tight channels, because if tomorrow we get a high test here, so see this candle that we had here on Thursday, if we have that kind of candle, bulls attempt and we end up with that kind of candle as a high test candle, failed breakout above the broad channel, test of this lower high, you could sell that quite easily. If you get that kind of candle, sell that, you can put your stop above here or a little bit more conservative above here. Broad bear channel, two-sided price action, you can trade either side of the channel. High test, you can sell, get down here, low test, you can buy, get up here. Tight channel, pretty hard to do that. So with Nasdaq, bear that in mind. The bulls may want to get there, but we're breaking out of a broad channel that started late December. That breakout may fail, create a high test of that opportunity for the bears to sell. So just keep that in mind. So those are the kind of two additional factors that I would have liked everyone to have a look at. All right, let me have a look and see if there are any questions. Oh my goodness, there's no questions. All right, guys, any thoughts, any questions before we kind of wind it down? So it's pretty important, I think, from a price action perspective. Look at all the markets you're trading. You might have one market, two markets, it doesn't matter. Identify, especially now, beginning of the year, any key levels that you've got. Key levels of resistance, key levels of support. Are there any kind of channels that are in front of you? And just get a sense of where things might go from the beginning of the month. This is off the daily chart. You can look at it weekly, whatever the case may be. Okie dokie, Sam, thank you very much. We are done with this week's Sunday market update. We will catch up again soon, guys. Oh, hold on a sec. Can you look at, oh my goodness, look at euro versus dollar. Okay, good question, Chris Sami. You're going to have to just give me half a second because oh, this is a PowerPoint. I didn't have my trade on my MT4 open. So if you just give me a few seconds, I am going to go and open my MT4 and find euro, and then we can just put it up. Euro versus dollar. There we go. Right. I'm just going to be talking through so that you don't get bored. So what is it doing? Now I'm going to go. I'm going to share MT4 and uh, my apologies up front. I am using a laptop that doesn't have JDR, so please do forgive me. Okay, there's a raised hand. Just post a question if you have the chat box. Okay, so this is euro versus dollar on the daily. When I open up a chart and just look at it, immediately I'm going to say to myself, is there anything that is distinct on the chart? Okay, so we are down here. What is distinct for me, which I want to put in, and what I'm going to do, just to be consistent, move the indicator. I can see we are in some form of a channel. Okay, that's kind of obvious for me. So, okay, what else do I see? Well, we had a bear breakout, we had a pullback bear breakout. We kind of went sideways in here. Now we are in a channel. So if you're looking at this market, is it distinctly a bull breakout or a bear breakout? Or is it unclear? Well, we could say, I think we all would agree that it's a little bit unclear. If it's unclear, it means it's a trading range. A trading range, guys, can be horizontal. It can be ascending or descending. An ascending trading range is a channel. It's a broad channel, like I showed you on NASDAQ. NASDAQ had a descending channel. It's a trading range. It's just sloped downwards. So here we are in a trading range, two-sided price action. If we're trading this on the daily, there is nothing for us to do because the trading range is not broad. When I say it's not broad, it means if you take a trade, you decide where to put your stop, can you at least get one-to-one before we get to the bottom of the channel? In this case, you can't. If we're going to make it up, if the top of our channel was somewhere in here, this top was in here, it's going up, it's coming down, it's going up, it's coming down, and you get a setup, you could sell at the top of the channel saying, I know there's a high probability I'm going to go down to test bottom of the channel, at least make one-to-one. So in this case, on euro versus the dollar on the daily, I would just wait and do absolutely nothing until I get clarity. Look at this. This is clarity. Market is selling off. Market is selling off. Then you can decide what to do. When you start to get sideways price action, just move to something else. Okay, let's have a look. New Zealand dollar. Let's see. Let me take these off. Just make sure they don't. Let's I'm sure the guys will trade. They say, jeepers, George is so slow, man. This is a better way. Just type this or do that. And I'm sure that is. Why is it? Where do I have it? Okay. I would list it, but I can't see it. There you go. All right. What is the most obvious thing when you look at it? Trading range. Let me use this just to show the trading range. I'm going to change the color. Now, even if your strategy is a ranging strategy, you still need sufficient height between the resistance and the support to at least make one-to-one. Here we are in a trading range, right? Are you going to sell this straight into the low? No, you're not going to do that. If you are in a trading range, you want to be selling high or buying low. Now, if you got that kind of signal somewhere here that you could sell, hoping to get to this low. At this point, you couldn't because the low of the range was here. It wasn't one-to-one. If I do that, measure move to entry, stop even there. At that point, there was no one-to-one. So there's no point doing anything. So if you're trading in a trading range, you need at least to see a one-to-one before you can jump in. So nothing to do in here at all from a pure price action perspective. Um, okay. All right. So I think, well, I'm not going to say most markets, the ones that we're in are definitely a trading range. So I would wait. What would I wait for? I would wait for a bull breakout or a bear breakout. Wait for a breakout if you're going to buy and the test. Or if you're going to sell, wait for an attempt to break out and fail and make sure at least you've got one-to-one. So if anywhere in here, we will break out and we get a lower test candle, let's say something like this here, and the bulls, a lower test candle down here. At least we know if we take that, we still can make one-to-one before we get to the top of the trading range. That would be fantastic. Or if you get a high test candle, you know that at least you get, if you're selling a one-to-one before you get to the bottom of the trading range. All right, guys, I hope you found that useful. Let's check. Okay. Well, thank you very much for the questions and inputs, and really appreciate your comments. Thank you, Dr. Sami, Cleon, Rob. Thank you for participating. Thank you guys for turning up. And thanks to Sam for hosting us. Thanks, Sam. We